There's a hot new SPAC on the street, and ARK Invest looks extremely bullish on the future of this new merged company. How bullish, you ask? Take a look for yourself. In just the last week and a half, ARK has spent nearly $30 million on this new SPAC, and the merger was only announced less than a month ago. Clearly, ARK sees something here in this future merged business and is loading up heavily, and I wouldn't be surprised if they continue to keep buying here at these current prices. So what is this business that I'm talking about? What is this SPAC stock? What does ARK see that maybe the general public doesn't see yet? And what makes this SPAC specifically better than the whole slew of SPACs that we've seen in the last few months? Let's discuss. But first, guys, consider subscribing to the channel if you haven't. I know a lot of you watching are non-subscribers for whatever reason. Hit that red button down below, subscribe, drop a like as well. And now, let's get on with it. Opendoor. This is the company that we're discussing. Well, not quite yet. It's actually trading right now as IPO B on the stock market. Confused? Let me quickly explain here. So the way that a SPAC merger works is that this SPAC, special purpose acquisition company, comes in and their sole purpose is to find a company to merge with. They're what's considered a blank check or a shell company. They have no business really. They just have a bunch of cash and they're looking for someone to merge with to bring that business to the public markets. Now once they go out there, they find a candidate, boom, they pounce on that, they try to merge with that company, and if talks go well and the merger gets approved, well, you get a new combined company that's stronger financially than it was before and is now traded on the public markets. So in this case, that SPAC that we're talking about is IPO B. IPO B is Social Capital Hedosophia Holdings II, which is previously famous for their IPO A, which merged with a company that is now called Virgin Galactic, which a lot of you watching may be invested in. Anyways, IPO B is the SPAC in this case, and the company that they're merging with is called Opendoor. Now, Opendoor is a startup real estate company and is valued at just under $5 billion from this deal. So let's take a look now at the merger details, and here we can see the new combined company will have a value of around $4.8 billion, and this deal is expected to provide up to $1 billion in cash proceeds to this company, which includes a fully committed PIPE of $600 million and up to $414 million of cash that's held by IPO B. It's also important to note that 100% of cash proceeds will be retained by Opendoor, with existing shareholders of Opendoor rolling 100% of their equity into this new combined company when the merger finally closes. Now, like I said, Opendoor is a company that allows Americans to buy and sell their home seamlessly through their platform on their smartphone with a tap of a button. Now, I don't want to get too into weeds here about Opendoor specifically in this video. If you guys do want to see that in a future video, smash the like button, get 1,000 likes on this video, and I'll make that happen. But for now, let's kind of focus on ARK's perspective here, because we want to discuss why ARK Invest is buying this stock. So, why do I think that ARK is buying? Well, ARK's mission is to find businesses that are focused on disruptive innovation. They're invested in massive success stories like Tesla and Square, which both have innovation and disruption qualities at its core. And well, I don't need to tell you how well those positions have been doing this year. Now with Opendoor, what they're trying to do is disrupt the way that you and I buy homes by making it much more customer focused, technology focused, and just making the experience much less hassle-free. And it's funny because just recently I was thinking about this, like, why is buying a home still considered such a complicated process? Why are there so many hurdles to jump through to go out there and buy a home that you want to purchase and live in? Or maybe you want to buy for an investment purpose. Why does it have to be so complicated? Why can't it be like how the stock market has become now, where you just open a brokerage account and you can buy a piece of a business? Why can't you do something like that for a house where everything is done on your phone? Now, there's a few industries out there, when I thought about this, that I think is ripe for disruption and needs to be disrupted, which is typically why I don't really invest in businesses in these sectors currently. The first is insurance. Not a fan of insurance. There's a lot of things behind the scenes that I find shady, that I find that they hide from consumers. They just aren't upfront with you when you go get an insurance quote for home or auto. Then the other industry, I guess, would be energy. Again, completely old dinosaur industry. You have absolutely no control. You are kind of tied to one company. That's the company that services your area. You pay them, you can't really dispute the bill, or you won't have electricity. Then after that, you have financials. Oh man, don't even get me started on financials. Financials, dinosaur company. I have an investment in Wells Fargo, as you guys may know on the channel. And well, it's my worst performing stock by far. I went against my kind of gut instinct there by investing in this sector. I kind of held off for a very long time, not touching financials, but Wells Fargo just looked very attractive. So I put some money in there, and well, it's not a business that I really want to build out anymore, and may actually be something that I close out at a loss. And kind of hand in hand with financials is mortgages. Mortgages, again, not a very user-friendly experience. It's kind of like you got to jump through hoops to get a mortgage rate. You have to get approved and all this other stuff, which could fluctuate your rate depending on what your credit score is, depending on what they advertise on the website, some special promotion. I don't know. They're just too much to go by. It should just be straightforward. You log in, they check your credit score, automatically give you a rate that you can accept, and you should be on your way. Some may agree, some may disagree, but I think that's an industry that needs to be disrupted as well. And really, in recent years, we've seen businesses come and try to tackle these problems. For insurance, we have a company like Lemonade that's trying to kind of change the way that insurance works. For energy, we have good old Tesla. You know, Tesla could be the future of energy. Then we have financials. You have companies like Square, PayPal. These companies are trying to disrupt the way that traditional banks operate and kind of make it more customer focused as opposed to, brick and mortar. You got to go into a bank to do everything. Then finally, for mortgages, you have companies like Zillow, Redfin, and now Opendoor. Now, if you look here, you can see there's many different companies that have come up in the past that have been massive success stories that have disrupted previous sectors. Netflix, for example, disrupted cable. Uber disrupted rentals. Carvana disrupted dealership. The list goes on. And I believe that ARK thinks that Opendoor can disrupt this new sector here of mortgages, home ownership, that kind of stuff. And I think it's pretty clear how bullish ARK is with the amount of money that they're putting into this company here. And you know what? They're clearly telling us they're making a big bet on Opendoor. And yeah, of course, it is definitely for their technology, but I think their strong management team that you can see here that the business runs on is also very strong. They have people from a vast range of backgrounds in tech companies, so they know a thing or two about working high up at a successful business that is tech focused at its core. Now, I'm going to be 100% transparent with you guys. I have considered investing in Opendoor. However, I'm not far enough in my research yet, so I haven't made a decision on that yet. There are a few things that I'm not too thrilled about with this sector as a whole. It's not an Opendoor specific issue, but what I still need to do is understand how Opendoor is better than its competition. Zillow and Redfin are two big competitors in this space as well, offering very similar things. So I need to understand what makes Opendoor so special. Is it just the cheaper valuation, or is there a lot more behind this business that makes it an attractive long-term investment? Redfin right now is valued at $5.77 billion, but it only really started moving this year as the stock stayed fairly stagnant for the last few years. Zillow, another big one, is valued at under $24 billion and has had similar movements, and it's fairly flat for recent years until this year as well, when home buying really took a turn to online platforms. So now the real question is, where does Opendoor sit in this new world? Is it valued somewhere closer to Zillow, or is it valued somewhere closer to Redfin, or kind of somewhere in between? That's what we need to figure out as investors. That's kind of what I'm kind of digging into to see if I actually do believe this company can be like a $25 billion Zillow, or if it's just going to be something like a $5 billion Redfin. There's a lot to understand in this sector, and disruption in mortgages, banks, that kind of stuff, I think is the way to go. I like supporting companies that are doing that, and that's why I'm even considering investing in Opendoor. But anyways, I need to do more diving into their financials, into their future prospects, all that kind of fun stuff, and then I'll make my final decision if I want to invest in this company or not. And if you guys want to hear about it, let me know in the comment section down below. Like I said, 1,000 likes on this video and we'll make a dedicated video on Opendoor, going through the company from A to Z, what it does, fundamentals, financials, all that good stuff. Either way, guys, thank you so much for your support, and don't forget to invest positively, and I'll see you in the next one. Peace.